Welcome back to Stocks and Trades channel. We provide easy to digest information in short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that will be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. As war broke out between Russia and Ukraine, the week ended up modestly positive overall for the S&P 500 and the Nasdaq, with the Dow essentially flat. Stocks made a huge turnaround, falling sharply on Thursday morning as Russia began its invasion, then recovering later in the day and on Friday as countries imposed increasingly stiff economic sanctions against Russia. The S&P 500 on Tuesday began the holiday-shortened week with a 1% decline, which pushed the index into a correction, as it was down more than 10% from a record high it reached on January 3. It was the first correction for the S&P 500 since the pandemic began. The Nasdaq preceded the S&P 500 in correction territory by about 5 weeks, as its decline on January 19 put it below the 10% threshold. A gauge of investors' expectations of short-term stock volatility soared about 22% on Thursday morning to the highest level in a month, but it quickly retreated to end up slightly lower for the day. The impact of the Russian-Ukrainian war and resulting international economic sanctions weighed heavily on Russia's stocks and its currency. A Russian equity index tumbled 33% on Thursday but climbed about 19% the next day. The ruble shed about 8% on Thursday before gaining around 3% on Friday. The price of U.S. crude oil briefly topped $100 per barrel on Thursday morning, the first time that threshold has been reached since 2014. The spike came in the hours after the Russia-Ukraine war broke out, and the price retreated later in the day before ending the week little changed overall. Our first stock type is dividend-earning stocks. These are a great way to earn passive income. This week's suggestion is Citigroup, with ticker symbol C. Citigroup Incorporated, a diversified financial services holding company, provides various financial products and services to consumers, corporations, governments, and institutions in North America, Latin America, Asia, Europe, the Middle East, and Africa. Citigroup has over 200 million customer accounts and does business in more than 160 countries. The company operates in two segments: Global Consumer Banking and Institutional Clients Group. The Global Consumer Banking segment offers traditional banking services to retail customers through retail banking, Citi-branded cards, and Citi Retail Services. It also provides various banking, credit card, lending, and investment services through a network of local branches, offices, and electronic delivery systems. The Institutional Clients Group segment offers wholesale banking products and services, including fixed income and equity sales and trading, foreign exchange, prime brokerage, derivative, equity and fixed income research, corporate lending, investment banking and advisory, private banking, cash management, trade finance, and securities services to corporate, institutional, public sector, and high net worth clients. The company was founded in 1998 and is headquartered in New York. Jane Fraser has been serving as Chief Executive Officer of Citigroup since February 2021. Some technical analysis data shows that Citigroup's return on equity is 11.3%, its average volume is about 25 million, its market cap is $122.99 billion, its beta is 1.69, its PE ratio is 6.11, its PEG ratio is 0.74 and its EPS is $10.14. Despite our rating is 8, we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Citigroup in the last 3 months, the average price target is $76.88, with a high estimate of $107 and a low estimate of $68. With current price at $61.98, this would mean about 24.04% average profit over the next year. Citigroup pays an annual dividend of $2.04, which amounts to a dividend yield of 3.29%. The ex-dividend date forecast is the 29th of April, so buying a Citigroup stock by then will pay you 51 cents on 27th May. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is SoFi Technologies, with ticker symbol SOFI. SoFi Technologies Incorporated is an American online personal finance company. SoFi provides financial products including student and auto loan refinancing, mortgages, personal loans, credit card, investing, and banking through both mobile app and desktop interfaces. The company also offers SoFi Weekly Dividend ETF, an equity ETF to provide a weekly dividend payment to shareholders. The company was founded in 2011 and is headquartered in San Francisco, California. Anthony Noto is the Chief Executive Officer of SoFi since February 2018. Some technical analysis data shows that SoFi's return on equity is minus 13.64%, its average volume is about 54.27 million, its market cap is $8.53 billion, its beta is 1.35, its PE ratio is minus 6.3, and its EPS is minus $1.68. Despite our rating as 6, we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for SoFi in the last 3 months, the average price target is $18.85, with a high estimate of $22 and a low estimate of $16.50. With current price at $10.67, this would mean about 76.66% average profit over the next year. After reaching highs of around $24 last November, SoFi stock has since fallen back to just $10. This sell-off now seems overdone for these reasons. Firstly, the fintech has recently acquired a bank charter, meaning that it will be able to directly lend to customers. This should be a major boost for profitability. Secondly, the bank is growing at incredible rates. Indeed, in the third quarter trading update, it announced that it had 3 million members, which was a 96% year-on-year rise. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Our third stock type is blue chip stocks. These are typically large, well-established and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is Verizon, with ticker symbol VZ. Verizon Communications Incorporated offers communications, technology, information, and entertainment products and services to consumers, businesses, and governmental entities worldwide. Its consumer segment provides postpaid and prepaid service plans, internet access on notebook computers and tablets, wireless equipment, including smartphones and other handsets, and wireless-enabled internet devices, such as tablets, and other wireless-enabled connected devices comprising smartwatches. It also provides residential fixed connectivity solutions such as internet, video, and voice services, and sells network access to mobile virtual network operators. It has approximately 115 million wireless retail connections, 7 million wireline broadband connections, and 4 million Fios video connections. The company's business segment provides network connectivity products, including private networking, private cloud connectivity, virtual and software-defined networking, and internet access services, and Internet Protocol-based voice and video services, unified communications and collaboration tools, and customer contact center solutions. This segment also offers a suite of management and data security services, domestic and global voice and data solutions such as voice calling, messaging services, conferencing, contact center solutions, and private line and data access networks, customer premises equipment, installation, maintenance, and site services, and Internet of Things products and services. It has approximately 27 million wireless retail postpaid connections and 477,000 wireline broadband connections. The company was founded in 1983 and is headquartered in New York. Hans Vestberg has been serving as Verizon's chief executive officer since August 2018. Some technical analysis data shows that Verizon's return on equity is 29.1%, its average volume is about 23.45 million, its market cap is $227.19 billion, its beta is 0.39, its PE ratio is 10.17, its PEG ratio is 3.52, its EPS is $5.32, and its return on capital is 9.9%. Our rating is 10 and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Verizon in the last 3 months, the average price target is $60.44, with a high estimate of $68 and a low estimate of $56. With current price at $54.12, this implies a 11.68% upside potential over the next year. One thing that attracts investors to Verizon is its dividend, which the company has consistently increased over the past 15 years. With a current annual dividend of $2.56 per share, Verizon provides a 4.76% annual yield, one of the highest in the S&P 500 as well as one of the most reliable. Yet its valuation is relatively cheap compared to the long-term value it can potentially provide. Two of the company's main 2022 priorities are strengthening and growing its core business and leveraging assets to grow its 5G capabilities. If the company can deliver on these goals and continue to grow its dividend, as it has in the past, the current stock price makes it a bargain for investors looking for investment income. The above analysis is not exhaustive and just presents you some important insights. We suggest using this analysis and carry out your own detailed research before taking a decision to open any position. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully consider opening a position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. Workday Incorporated, Lucid Motors, Zoom Video Communications, and HP will release earnings on Monday 28 February. Tuesday 1 March will be the most popular day of the week as Salesforce, Target Corporation, Sea Limited, ADT, SoFi Technologies, and Baidu among others will release their earnings on this day. Snowflake Incorporated, Prudential plc and Viva Systems will release earnings on Wednesday 2 March. Broadcom Incorporated, Costco Wholesale and the Toronto Dominion Bank will release earnings on Thursday 3 March. Finally, Bull plc and Hibbett Sports will release earnings on Friday 4 March. Watch these stocks' prices carefully and think twice before making any decision. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. Monday 28 February will be the most popular day of the week and is the ex-dividend date for Lockheed Martin, McDonald's, Realty Income Corporation, Kellogg's, and Polaris. Tuesday 1 March is the ex-dividend date for Sun Life Financial, Main Street Capital Corporation, and Goldman Sachs. Wednesday 2 March is the ex-dividend date for Marriott Vacations Worldwide Corporation, Shutterstock, and Nvidia. Thursday 3 March is the ex-dividend date for Kimberly-Clark Corporation, PepsiCo and Dominion Energy. Finally, Friday 4 March is the ex-dividend date for BlackRock, Equinix, FedEx Corporation, and Nike. Be sure to buy any of the above stocks before the market closing of the ex-dividend's date previous day to benefit from the dividend payment. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.